Ready to elevate your credit understanding and score? With insider tips and a plan, you can take action to improving your score, which can save thousands in unnecessary finance charges. Let's tackle today's topic with your coach, Credit Christi.
Hey friends, it's Christi, your credit coach. Thank you so much for joining me for another episode. Today, we come to you from the Empire Studios, and we are inside of the Harry Potter room. A lot of fun. So I am here with my friend Christi DiCenso, and she is a business credit expert. If you have listened to me for any amount of time, you know I talk all about personal credit. And when I met Christi, I'm like, my girl, she's going to come onto this episode, onto this podcast to share an episode of her knowledge. And as always, if you have questions, send them to me and we can get Christi to answer questions. Maybe she'll come back for another episode. Send them to questions@creditchristi.com. We're doing things a little bit differently. I am not only recording the audio like I typically do, but we're doing some video so we can put it out on YouTube and social media and a couple of other things because I think it's this important. So say hello to my friend Christi, and I've got some questions here, and it's just so important. So we're going to dive right in, start talking about why and what when it comes to credit for businesses. So first things first, Christi, thank you so much for being here with me.
Thank you, Christi.
Yeah, the Christi Show. So you've got some stats on businesses that is really, really important and probably a big driver on why you even came into this business. So why don't you share that?
Absolutely. So we know that small businesses, in fact, 50% of them don't make it past the first year. And of that 50% of closed businesses, 66% of them close because of funding issues. The stats for 2022 alone, almost 600,000 businesses closed. Yeah. And it left the average business owner with a debt of almost $83,000 that had to be repaid. And that was repaying debt on a business that was no longer operable.
So you say to repay. So there's a couple different ways of lending.
Yes.
So what are the different ways of lending?
Yeah, so there's actually 3 different types of lending, which most business owners are very familiar with the first and second one. But when I talk about the third one, most of the time they tell me they had never heard of it. So the first one, which you're an expert on, right? Personal credit. we know that we all know what that one is. We use our personal social security number to buy personal items. The second one is called business lending, and business lending is it's a hybrid. It's leveraging the business owner and the business to qualify for lending. And most of the time, or I should say more often than not, that business lending it's taken out under the business, like you provide the EIN, but it's actually backed and secured by the business owner.
Right, personally guaranteed.
Yep.
Okay.
Yep, exactly. So that $83,000 was personally guaranteed business debt, right? So it had to be repaid. And one thing that's really unique about business lending is that if the secured loan comes from what the business owner qualifies for, even though it's business, it may be a business credit card that has the business owner's name on it. It may be a business vehicle loan that's secured by the business owner. Those loans and revolving credit cards and terms and rates come with personal rates, personal terms, and personal limits. So you're paying a lot more money than you should for those business lending options opposed to the third, which is my area of expertise, which is called corporate lending.
Okay.
And that's where the business can leverage its own credibility to secure funding and not needing the business owner to back it.
So you can't be a sole entrepreneur to have corporate lending. Right?
Great point. So really, I mean, if you open a business, you're entitled to an EIN. Yes. Even if you're a sole proprietorship, you are entitled to an EIN.
And you go to irs.gov to set one up.
Correct.
Okay.
Exactly. But with a sole proprietorship, you are your business, right? There's no legal entity or separation when you create a sole proprietorship. But if you were to create a corporation, LLCs, S Corps, C Corps. They are designed to have legal separation of business and business owner.
And some people probably think, oh, it's just me, or it's just me, my husband, so we can't be an S Corp or something like that. But that's not true.
No, it's not.
Awesome.
Yep.
Awesome. Okay. So when it comes to a scoring system, my audience has heard me talk about credit scores on the personal side. Really the lowest is in the 400s, the highest is 850. And by the way, I don't think I've ever seen higher than 839. So I challenge you. If you have something better than 839, brag a little bit and share that with me. Yes. But what's the scoring model for corporate lending then?
0 to 100.
Or I'm sorry, corporate credit.
Credit, yes. It was 0 to 100.
Okay.
Yeah. Totally different scoring system.
Right. So 100 is absolutely perfect.
Yes, and what's very unique about the scoring system with business credit scores is that an 80 is like, you're great, right? Because business credit, that score, is based on the business's ability to pay its bills on time. So if you pay your bills on time, an 80 is perfect, actually. Okay,
so let's say somebody in the personal credit world has a 740, 780, really exceptional credit, and they've had long-standing credit. They pay their bills on time. Does Dun and Bradstreet, see that's three, right? Does Dun and Bradstreet also take into account the longevity, or just a snapshot in time of payment history?
Great. So that's a great question. So there's actually three main business credit bureaus. You have Dun & Bradstreet, and then Experian and Equifax do have business sectors, which most people don't realize. So they're like the three scoring systems on the business side. And yes, I mean, they do look at longevity and length of time in business, but the score is actually, if you were to pull a credit score, and just so you know, pulling a business credit score is public knowledge. So as long as you pay for it, you can pull anybody's business credit score. It doesn't count as a hard inquiry. So if you want to know your business's credit score, you just let me know and I can pull that for you and we can go over it together. But it's they look at age, but they also look at a 12-month time span. So within that 12 months, they look to see how many payments you made and how many of those payments were made on time and how much money was paid through those payments.
Okay, so what do you mean by how much money? Like something that's a $30 a month obligation won't count as much as something that's like...
Great question. Such good questions. So this is what's really very cool about the business credit world and how the credit scoring system works, because aside from a business credit score, that 0 to 100, they also score you based on how much you spend and how much you pay. So you get a recommended credit limit from the bureaus to the lenders saying, this is how much we think this business should be offered. And that credit limit recommendation is based on how much they see you spend. So if you spend $120,000 in a year, but you pay $120,000, they're like, well, in the last 12 months, they've shown that they can pay $120,000 worth of bills. Why wouldn't we recommend them $100,000?
Now, when you say show paid, that's not on your personal credit, that is on the corporate that you've established.
Yes.
Excellent.
Yes.
Okay, see how important that is? It's like separation of church and state. The business doesn't look at your personal, right? Personal doesn't look at your business. Nope. Those are two separate. You are your own entity. Your business is its own entity. Yes. So Christi can show you how to establish corporate financing, right? That's reporting, and then generate a really great score.
Yes. So if I may, you used a very important word there, reporting. Unlike personal credit, it doesn't matter what type of lending you use. It could be loans or lines of credit or credit cards or mortgages. As long as there's any type of traction personally through lenders, whether good or bad, impacts your score, good or bad, right? If you don't pay, it drops your score. If you pay, it raises your score, right? Well, with business lending or business lending, they are actually not required to report. It is completely optional for business lenders. Why? Because This is how Dun & Bradstreet, Experian Business, and Equifax Business make money.
So you actually have to pay for them to report?
Yep. So
totally makes sense, but it's like, it's so different, right?
Wow. So if you're leveraging a lender for your business that elects not to report because they don't want to pay for it, then how can you build credit?
Right. That's the $1 million question.
Exactly. And that's where we come into play.
So you know the sneaky ways to make it happen. Yeah. I say sneaky, I mean like you know the goods to make it happen.
Exactly.
Awesome.
Exactly.
So a lot of people don't even know that, and they think I'm making this really great payment history and I'm doing all the right things, to find out a year or 2 years later nothing has been reported.
Exactly.
And had they spoken to you and worked through your company, they could have a 100 score or a 80 score or whatever, right?
Exactly. That's exactly it. So less than 7% of lenders actually report, and we know who that 7% of lenders are.
So awesome. You also mentioned earlier, when you were kind of setting us up for personal versus business and corporate, that there are limitations to our personal levels, right?
Yeah.
Like you can only get, I'm just going to make something up, a $30,000 limit through, Capital One or Discover Card, which now apparently is the same company. They've merged. But you got here in your notes that business credit has better rates and maybe even better financing. Can you expand on that?
They do. So with corporate lending, these lenders know that the expenses are for business that should make you money. Right. So they want this money to be more affordable. So they provide corporate lending at better rates, better terms, and sometimes 10 times to 100 times the limits than you would qualify for personally or with personally backed loans. But this is where I find most business owners struggle, is they cap themselves out, right? So if you are leveraging your personal credit to fund your business, let's say you personally qualify for a credit card for $30,000, but the business spends $50,000 a month. What are you supposed to do? This is a conversation I have on repeat, but all different variations every single week, where the business says, what I have available to me doesn't meet the needs of my business. And traditionally, there's really no other way around it. If they spend 50, but they have a limit of 30, they're going to max that card out every single month.
Which is going to hurt your personal credit score because of the debt utilization.
Exactly. Ooh. Exactly. So with corporate lending, you could max that card out every single month, but as long as you pay it off, utilization isn't a factor.
That is something worth just sitting in for a second. So corporate financing with credit cards and lines of credit don't have a debt utilization, so it's not harming your business. They want you to expand. So the money's cheaper, the money's larger. It doesn't hurt your credit scores to actually utilize it. Like that's the weirdest thing, because I'll talk to people and I'm like, hey, you've got to keep your balances on your credit card below 30%. And if you really want a better score, keep it below 10%. And they're like, but why? If it's available to me, but why? I'm like, I know. It's like having a whole candy bar and saying you can have one bite.
That's it.
But
that's it. They
why?
cap you.
It doesn't make sense.
Yeah.
So I'm so glad to hear that doesn't translate the same way for corporations, and so for corporate lending.
Exactly.
So I'm guessing a lot of business owners just have no idea about this.
No.
So if somebody's been in business for a really long time, is it too late for them to start now?
Oh, that's an awesome point to bring up. And no. You could have started your business yesterday, or you could be in business for 20 years.
Okay.
It is one thing, as I mentioned earlier, with those entities, right? Your structure, those S Corps, C Corps, LLCs, where you have that separation of business and business owner. When you create those type of corporations, you are protected from your business by what's called a corporate veil. It keeps you separate.
I love that.
Yes. But that corporate veil is only as strong as the business is. Meaning, if the business isn't strong enough to seek debt and the business owner has to provide their social, guess what happens to that wall? It breaks down, and now you become your business. So the whole reason you started a corporation goes out the window. But you can regain that integrity by building credit, refining anything that's tied to you personally and getting it back on the business.
Okay, I want to I want to sit with that for a moment, because somebody's listening to this going, how, right? Like, she's got the how. You'll have to talk to Christi for the how. Right now, we're sharing the what and why it's important. You're teaching me so much. Like,
good.
When we've had so many conversations leading up to today, and I'm super excited about this because I'm learning just as much as probably most of my listeners right now. But I know at least the most of the people in my life, they're not just up to one thing, right? They might have a job and then they've started a business or a company, and they're either seeking, growth in that company so that way they can leave their job, or, the job is paying their bills, but their business is really fulfilling their passions and serving people in the way that they want to, with their time given on earth, right? Yeah. So we're talking to a whole mix of people, but the majority of people that I talk to have at least a side hustle. So if somebody's starting off with a side hustle, but like all of a sudden they're getting some traction and it's like, oh, this is becoming a real business now. Would you recommend the first thing they do after obviously talking to you, you'll probably recommend that they talk to an accountant about how to structure their business, and then they get an EIN and you can immediately start? Like, is there a timeline and how long you have to be in business?
So no. I mean, you can literally start on the credit building journey from the moment you create your EIN.
How exciting is this? Yeah. Like, how exciting is this? This is so cool.
I know. It's something that business owners don't. I went to school for entrepreneurship. Literally, I didn't learn about any of this stuff.
Why? Can you come in as a guest speaker to the colleges and universities and be like, let me teach this to you?
It is undervalued information.
For sure.
Yep.
For sure. But like, I'm really grasping just how important it is, because so many businesses, I think even a lot of people that are just really good at their craft or their trade, they're like, I'm going to stop working for this guy and I'm going to go and do it myself. And they don't necessarily know how to run a business or to grow a business. And we usually find things out the hard way, right? Yeah. You just like the school of hard knocks. And so you oftentimes will link arms with people who will help you. And so sometimes that's an accountant, sometimes that's a financial advisor or a business broker or maybe a business banker. I've worked at banks. I've been married to a guy who is a banker for many years. Yeah. They're not talking about this.
The bank's underwriting doesn't allow them to.
Did you catch that?
Yeah. Why would a business banker want you to know about establishing a strong business credit score so that you can stop personally backing your business when their underwriting requires your social security number?
For the same reason that credit is not taught in schools, because they want you to borrow and pay high APRs for that borring. Yeah. Okay, good.
You're right on it.
We've cleared out some things here. Okay, this is so good. Okay, so I think we got through those, and then I bet there's some misconceptions in business lending.
Yes.
Yeah.
Yes.
What are the top ones?
So first, I've been in business. I have business credit cards, or I have business vehicle loans. So I have to have credit. I must have credit. As I mentioned earlier, if you're using the 93% of the lenders that don't report, you'd be surprised to realize that you don't have any business credibility.
Okay, clarifying question. Yeah. I'm making this up. I just bought a car in my business name. It may not be reporting on a business credit report.
It may not, because if that lender that you use to secure the loan for that vehicle isn't a reporting lender, then no, it's not going to build your credibility on the business.
What a misconception for a lot of people, because they're like, I'm building business credit. I bought it in the business name. Yeah. Oh my gosh, this is so good. Okay, what else? What is another misconception?
Oh man, let's see.
I know at one point we were talking about how cash is king.
Oh yes, that one's my favorite, actually, because I get that all the time, where business owners are like, oh, I don't like to take debt. Oh, I'm not asking you not to pay it. Right. I want you to pay it, right? So there was a business owner that I'd spoken to that was like, I just like to buy things cash. He's like, in fact, I needed another vehicle for my landscaping business, and I saved up for 4 months. I put money aside for my cash flow, and when I got $35,000, I went and bought the truck. And I was like, well, I have your business credit report right in front of me, and based on the fact that you have no business credibility and you would have had to finance the vehicle personally, and interest rates right now on vehicles are like 7-8%, even if you're in the 800s, I probably would have bought it cash too. But if you had business credit, I'm seeing vehicle loans between 1 and 3. And you told me it took you 4 months to save for that vehicle. How much money did you give up waiting to bank for this vehicle purchase?
And what else could you have used that money to leverage in those 4 months? Right.
You could have taken on a big project, a big landscaping project. And he was like, oh.
See, we don't know what we don't know. And this is why you partner up with experts. So there's probably a misconception that all business lending requires some kind of personal guarantee. Is that true?
That's a huge misconception because, as I mentioned earlier, we're used to going to the traditional banks, and the banks have their underwriting require those personal guarantees. But if the business qualifies for $100,000 and all you need is $75,000, if you go to the right lenders that aren't going to ask you for your social, then don't provide it. Let the business take the loan.
So good. Okay, so what would you say are some pitfalls when you are leveraging business lending as opposed to corporate lending? Because you've defined that those are two different things. You said that there's personal, there's business, and there's corporate. So just talking about business and corporate, what are some of those pitfalls?
Well, money's obviously way more expensive in the business lending side. So if you're leveraging your social, you're leveraging it at
because it's personally backed.
Personal rates and terms, exactly. And a big one, like I said, is that being overspent within the business. I see that they want to grow and scale, but the money's not available to them because they're still personally backing it, and they personally don't qualify.
I'm over here wondering, like, how many businesses could have scaled up to that next level in their growth and in their expansion? Business owners are oftentimes employers, right? So they employ families and people and pay wages and make contributions to their community, and like there's all sorts of things that come out of positively that come out of a business that can grow healthy. And there's so many people that I bet are just capped, not realizing that this corporate, if you just step over into this corporate world and partner with somebody just like you, that the sky's the limit.
It really is. Do you think Fortune 500 companies are personally backing their business?
No.
No. Well, why are we, right? And like this is one scenario that I love to mention because this one really like makes sense to people.
Okay.
And think of I'm not a parent. Are you a parent?
I'm not a parent.
Okay, I didn't think we talked about
I'm
children.
not a
mama. So not speaking as a parent, but my parents, I'll use what my parents did for me, right? And when I was spreading my wings and becoming an adult, right? You start getting different lender, right? You get a Victoria's Secret credit card and Express credit card. And I remembered I got a Visa Loft.
Whoa.
Like I was like, yes, I don't have to use my debit card when I go to get gas. And then I wanted to buy a vehicle. But my track record didn't show that I qualified for a $35,000
your 4 months of your
loan.
Express credit card.
They're like, okay, this is going to cost you probably, your payment's going to be probably $600 opposed to $275 if you have someone with good credit back you. So what do parents want to do?
Co-sign.
My dad co-signed for me for my first vehicle.
Now your dad's on the hook. Should you not pay?
That's exactly it. So my dad telling the lender, if my daughter doesn't pay her vehicle bill, you can come after me.
Yes.
It's no different than when you co-sign for your business. If you're not paying, if the business can't pay it, you're telling the lender, I'll pay it if my business can't. But as a parent, I know my dad told me by the time I graduated college, he's like, done, don't ask me for anything. I'm not,
did my part.
Yes. go do your thing.
Yeah.
And he didn't want to have to co-sign for me anymore for things. And after I paid down that vehicle, you're getting Discover credit cards,
Right.
you're getting Amexes,
Yeah.
you're buying other vehicles that
Because now you have a track record.
don't need a personal guarantee
Yeah.
for. So don't you want the same for your business?
Absolutely.
To be able to like go buy things without needing you?
Right.
Right.
And so let me ask you though, with your dad saying, don't ask me for anything else, I'm not going to co-sign for you. He was saying, you've got your running start. You don't need me anymore. He didn't say, I'm not cheering you on and I don't believe in you.
Right.
Just like if you have a corporate lending side now, it's not like you don't trust in yourself for your own success.
Right.
You're just saying you can grow beyond what a person can do. Yeah, I love that.
Exactly.
So you had mentioned that more often than not, businesses never make it to the corporate lending side. So what stops them? Like what keeps them at that business level and not able to get to the corporate?
Yeah, because of the lack of reporting lenders.
So you're that bridge to help them get to that big girl step.
Yeah.
Big boys.
Believe it or not, credit building is the same. Business credit building is the same as personally credit building, but you have to know who to leverage for those expenses. And if you don't, then
it just doesn't get reported.
You're like a hamster in a hamster wheel. You're like you never get off. And because you're the
Sounds
lenders,
exhausting.
it's horrible. And the track record of business owners actually trying to do this on their own could be 5 to 7 years, and they still never get where they're supposed to be. I have a client that actually came on board with me. He's like, Christi, I've been doing this for 3 years. I've done so much research. I've found these lenders, and I pull her credit report, and she's got $2,500 in recommendation on a $2 million business. $2,000, and mind you, that's what I usually see, $1,500, $2,500. And she's like, but how is that even possible? And it's not just knowing who, because she was doing her research, and a lot of the lenders that she was using for her business were actually in our recommendation. But what people don't realize is that in the business credit building space, it's more than just knowing which lenders to use, but it's also making sure that they report back to your correct profile. So we're going in and finding out that yes, you leverage this reporting lender, but your profiles are set up wrong on Dun & Bradstreet or Experian, and they don't meet the account you took out open on this lender. So they didn't even know which report to report it to.
So it's the same as it just not even happening at all.
It's just exactly.
Oh my God.
So not only is she using the right ones, they just didn't know where to report it to because her profiles are set up wrong.
And so you set that up. Oh my gosh.
Yeah.
Okay. So talk to us about entity.
Yeah. So so earlier mentioning the corporations, like I really don't even want to work with a sole proprietor.
Okay.
There's no point. Right? So sole proprietorships are, in my definition, it's a hobby.
Yeah.
Right? And the lenders kind of look at it the same way, right? You haven't gotten to a corporation yet. You're probably still working out of your house. You're not.
There's nothing wrong with that. It's just not. It's
just
what's
not
the purpose of business credit then?
That's exactly it.
Right.
There's no point because you are your business.
Yeah, you don't have that $50,000 a month outflow and have employees and maybe some of the other things.
No, exactly.
Right, yeah.
No,
So
and there's no
not a need.
No, exactly. And there's no. I mean, most start as sole props.
Yeah, exactly. That's where you start.
Exactly.
But if your goal is to become
grow
something,
and scale, then you should be moving over to a corporation, and you should be getting an EIN, which allows for legal separation. Even as a sole prop, if you take out an EIN, you still are your business.
Right.
So you cannot legally separate yourself from your business because that's how the entity is structured.
Okay.
But with corporations, you are legally separate because your business is its own legal entity. So that's why working with corporations is our lane.
Yeah. Well, that makes good sense, and that's where you could do the most help, because that's the people who are essentially needing it.
Yes.
Yeah. So I just want to make sure I did a good job of not making it sound like sold props aren't important.
Oh, gosh, no.
No.
Yes.
That's the lifeblood of where business starts. Exactly. It's just for those that desire to take it to to the next step and then the next step.
Yeah.
This is you need to know her so that you can get there.
Yes. If you have goals of well, even with sold props, right, there's caps, right? They're like, if you make more than this much a year, you should be moving to a corporation. Right. So at that point, that growth calls for credit building.
Right. And some people start off as an LLC, and then they turn that LLC into also an S corp. Like they move it into an S corp.
That as well.
So just like you morph and we morph, like our business morphs and should, right?
Yep.
And then you've got something that could be part of an exit strategy. You know, a lot of sole proprietors or self-employed. It's like when we're done working, we just kind of like shut the light off. You know, it's like, okay, I'm gonna not do this anymore. Where a corporate entity, you've got something to literally sell.
Yeah.
Right?
Absolutely.
Yeah. So that could be like an exit strategy. Now you've made some money off of the business when you go to sell it.
Of course.
So you talked a little bit about how business credit is scored. Do we need to go back to anything there? Do you feel like we covered all of the bases there?
Yeah, I think that the most important part in that scoring system, again, is just remembering that it's its ability to the business's ability to pay its bills. And I do have a little trick for you guys. If you can pay your bills early, that's how you get from 81 to 100.
Oh.
Right? So if a lender sees the business at higher than an 80, it just tells the lender not only do they pay their bills, they pay them early.
Nice.
So it's like free points. And in business lending, 1 day late is 1 day late. As I mentioned, the 7% of lenders that elect to report, and the other 93% don't report, 100% report if you miss a payment.
Got it.
So make sure you always pay your business bills on time, because if you're 1 day late, it actually affects your credit score. There's no like, hey, here's a late
grace
fee.
period.
Like you see that on the personal side where it's like, hey, I may not report it for 60 or 90 days.
Right.
And we slap you with a $19.99 late fee.
Yeah.
With business credit, it literally, you automatically get marked as 1 day late.
Such good knowledge there. So talk to us about the 4 tiers of credit.
Glad you brought that up. So I shared my personal credit building journey, right? Like those vendor accounts or like store cards. Then you get some of your revolving credit cards like my Visa. And then I got a vehicle, but had to be backed by my dad. And then finally I could get vehicles on my own. Discovers, Amexes, I have a home, right?
Yeah.
All those things unlock. But if you think about that process, you at 18, you can't just go buy a home.
No.
Right?
You have no payment history at all. Yeah.
You have to show that you're a fundable person. And business credit's the same way. And we have broken it down into 4 tiers.
Wow.
Meaning in the credit building journey, we're literally just going to tell you, hey, when you buy this, I know you're using this lender. That's not a reporting lender. Use this one instead. And we start with your trade lines like net accounts, your net 15s, your net 30s, your store cards, right? Where they might give you $500, but it's just prove yourself. Get on the board with Dun & Bradstreet.
Place to start.
And Experian and Equifax business. And then we can graduate essentially to tier 2 lending. Tier 2 lending is more revolving credit cards. Then you get into 3, which is some vehicles, and then you get into 4, which is commercial property.
Wow.
And big vehicle loans like
fleet.
Multiple vehicles. It could be semis, 18-wheelers.
Wow.
And large pieces of equipment. So those are tier 4 is when you've unlocked corporate funding.
Wow.
Yeah.
Okay. Not everybody needs to go there, right? Like there may be some people that don't need the big things. Do you see where there might be one tier that a lot of people kind of rest at, or is it just it depends on the industry?
So if for us, they're going all the way through. We're teaching them how to get all the way to the 4th tier, because that's the win, that's the money. Because if you look at the tiers like schooling, right? Elementary, middle school, high school, college, right? If you're in elementary school, which is what most businesses look like when they come to me, even if they've been into business for 20 years, from a lending perspective, they have no credibility on the business because nothing's reported in the 20 years they've been in business.
Just a bebe.
Yep. So if they're still at that infantry stage in the credit building process, I can't get them to take college courses.
No,
we're not in college yet. We're still in elementary school. So they've got to pass each of those kind of grade schools.
Yeah.
But you can have an 80 in tier 1.
Wow.
And you can have an 80 in tier 2. But like my client that was working on it for years was at $2,500 still in tier 1, and what can she get with $2,500? She had an 80, but in tier 1. So you proved yourself to the tier 1 lenders, but you got to prove yourself. You got to pass every single stage in the credit building process.
Wow, that's so good. All right, so are there certain types of businesses that are most ideal for credit building?
Oh, do you have expenses?
Yeah. Okay. I love that. If you have a business that has expenses, then you're an ideal.
You can build business credit.
That's awesome. Yeah. Okay. So our call to action, like people have been like, just, okay, tell me how. The how is with the consultation to figure out how you can serve them, right? Absolutely. Because I'm sure every business and what their goals are going to have probably a different call to action. Like you might do a path for this business owner and their corporate needs different than this, right? Like it's customized, right?
Absolutely. Through every business is different. Yeah. They have different needs, different wants, and a different path, right? So with us, we have certified credit analysts on our team that know the lenders, know their underwriting, know who they report to. So the process is very easy because we've mastered it. Right. So all we have to do, as I mentioned earlier, is change how the business pays its bills.
Okay.
Start using these lenders when you buy these different things, and your business will naturally begin to build credit with your everyday business expenses. Awesome. So we have to tailor it because I have clients that come on that don't have great personal credit because the business has affected that credit. I'm sure you probably see that often. So we kind of have to build credit without keeping the business owner in any of the financing. Right. So it's a slower process. Okay. But if they come on with really great personal credit, we can use them in the beginning to kind of skyrocket.
And then baby steps take it off.
Out of it.
Okay.
Exactly.
Okay. So I heard there's no restrictions on industry or business.
Yep.
Is there any restriction on place in the country?
No, I can work with businesses all over the United States, but they have to have an EIN.
Okay, you have to have an EIN, and if you don't have one, you can get one.
You can get one.
IRS.gov. And if you're filing for business taxes, I think you have to have an EIN. I'm not an accountant. I don't play one on TV, but I think you have to. So unless you're sole prop and it just shows up as a Schedule C on your personal tax returns. So you have taught me so much. I feel just empowered with such great information. I'm so grateful for you because I don't need to be a master of everything. I know where my lane is, but what I do need to know is who to lean on and who to connect with. And I think that's such a differentiator for people's different levels in success in life is surrounding yourself with the right people, to the point of your client that came to you, had tried it for 3 years by herself. Think about her billable hours. If she made a couple $100,000 a year through her business and she spent, let's say 10 hours a month trying to figure this stuff out, okay, 120 hours a year, multiply that by what her billable hours are, like she could have hired you for an inkling of the stress, for just a sliver of the cost involvement and had expedited that time. So, just because I could change the oil in my own car, does that am I going to take that on? No, I'll pay somebody for that service to have it done right. I'll probably have the oil valve falling out on the interstate if I do it. So partnering with the right people, especially when it's your business. That's your
it's
livelihood. And your baby. So there's a lot on the line for it. Why wouldn't you want to expedite that success for yourself? So do you have some contact information you'd like to share?
I do. Well, one thing I definitely can provide all of you guys if you reach out to me. My email is Christi, CHRISTI ALLIE @jgalt.io. If you email me there, we can set up a free consultation. Also, if you go to my website, it might be actually easier, which is www.jgalt.io/Christi Alley, CHRISTI ALLIE. If you scroll all the way down, you'll get my calendar link. And if you provide me your business's name and business's address as it's registered with the Secretary of State, I can run a complimentary business credit report for you. We can go over it together. You can book some time on my calendar. But also on my website, you can download a free ebook on business credit.
Outstanding. Yes. Oh my gosh. I wish I'd met you years ago.
Me too.
I know, for a lot of different reasons, but I'm so grateful that you shared this amazing wisdom with our listeners today. And I have a call of action for anybody who's watching or listening to this. If you know of somebody who is at business status and you want really great things for them, share this link with them so that they can understand there's a service that provides this out there for them for the success and the greatness of their business, and that they don't have to go and try to figure this stuff out on their own. Like, that part sounds miserable. Like, go do your business, go do you,
yes.
go do what you do best, and leave that part for the people who know the ins and outs, who knows the tricks, and can bring their magic sauce. So thank you so much for being here. I'll have Christi's contact information in the notes underneath this video and this audio. And until next time, my friends, stay well.
Thanks.